So welcome everyone, it's Angus Levy for Trading with Angus, and in this training session I'm going to be going through all the different indicators I use and doing my best to explain each one so that you have a better idea of what I'm using and why I use them. When you first look at our charts, they look really complicated because there's so many different things going on there. But once you train your mind to see them and understand them, it becomes much easier. So the first thing, obviously, we have is the candles themselves. Now, the thing about candles and movements is you're never sure whether it's the actual candle position at that moment in time is overbought or oversold. So you need some way of working out whether it is about to reverse or whether it's going to continue in the one direction. And for that, we use two different indicators that allow us to decide the value of price at that moment in time. And we use this or these two indicators down here on the bottom to tell us at a quick glance whether it is overbought or oversold. Now, the main one I use is what we call the MBFX. That's this one here. And you can see it's got green, yellow, and orange. Green obviously is going upwards. Yellow is sort of changing direction, and orange is when it's heading downwards. Now, there are two green dotted lines, one at 80% and one at 20%. And the rule of thumb for me anyway is that when the MBFX is above the 80% or below the 20%, it's then in an overbought or oversold situation. And the chances are pretty good at that point in time that within the next few minutes, price could change direction again. This is not a 100% guarantee. It's just that, you know, the likelihood of a changing direction is much higher now than it would have been before. We back that up with the value charts, which are these candles here, which do more or less the same thing. And the yellow lines here correspond to them. Now we've a minus 1.25 and a minus 2 and a plus 1.25 and a plus 2. So basically when it crosses over the 1.2 and hits the 2 level up here, that's when I decide that yes, price is over bought. And usually when you see that happening, you'll get a yellow arrow up here on the top chart when it passes the 2 level, or even the 1.75, in fact, I think it is. Now, if, however, it moves back down below the 1.25, within that same candle, then it's no longer in what I would call overbought situation. And obviously the reverse is the same for oversold as well. Now, the interesting thing about these candles, if you look at them, at first glance, I'll just bring this back down a little bit so get a better idea. At first glance, you may think, oh, it's following exactly what's happening here, but not quite. You can see, for example, these 4 candles here, price is in a general downward direction, but here it's actually going upwards. Do you see that? So price value is continuing to increase here, whereas here the price is going downwards. So it's another way really of working out, well, what direction is price possibly going to go in the next little while? So when it's going up, it's showing that the price is getting more and more overbought, and that chances are it'll possibly be going down. It's more important when it's, you know, up in this area here, than obviously necessarily down here. But you can see what happened here is price was in the was going down, and it actually hit the overbought area. Would have given us a signal for a buy. It worked for 1 minute, but then suddenly price took a big jump down well into the overbought area. So that would have been a good, even without an indicator, would have been a good time to take a buy on that signal. Now, it didn't give a green. I would imagine it actually did at the time if you were watching it live, because it was well oversold. And you'd have won even on the 2 minute if you were quick enough. Please feel free to interrupt if you have any questions, guys. And we can make this interactive. If you need to ask any questions, feel free to either pop them in the chat or open your mics. Okay, going on from there, let's finish off with the bottom charts first. We also have the Bollinger Bandwidth, okay, indicator. That's this red line here. And what that tells me is whether price is in what we call constriction or contraction or not. So you can see here where it was just sort of tipping along between the 5 and the 8 level. It's 0.0005 and 0.0008. For me, when price goes below the 5 level, it is now in constriction. And it doesn't come out of constriction until it goes above the 8. Now, normally these are much wider apart, but it was distorted, obviously, by this movement here. But you can see how narrow the bands were here. I mean, it went from, let's just draw it here. It went from 57 pipettes there to probably several times that. I can't even get the, let me see if I can reduce the size of the chart here to get it all in, just so you can get an idea of how constricted it was. I still can't get the bottom, but it went to over 677, okay, from 56. So that gives you an idea of how constricted the price was right along here. But then it became distorted by this huge candle movement here. This is probably more representative of the normal, 133, okay? So all it does is it gives me an idea at a glance whether price is in constriction or not. I don't generally use it for the red and green arrows, but I do use it when I'm trading the blue, magenta, or orange, because price never likes being in constriction, and it's always trying to break out of constriction, and that's exactly what it was doing here. It was in constriction the whole way along, and then boom, it broke out from constriction. And you can get trapped there as well. You know, for example, if we'd taken a signal based on this arrow here, we'd have been okay for the first minute, but then massive loss in the second minute. Now, again, we would have recovered if we'd gone back in, but you just have to be careful, because this is what we call a waterfall, where price just goes way, 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 way down, more so than normal. Okay, are you happy with those 3 indicators and how they work? I would presume you are.
What are the settings for?
Sorry, Camille, go ahead.
What are the settings for the Bollinger Bandwidth?
for the Bollinger Bandwidth, it's 0.0005 and 0.0008. And you can find that indicator if you just search for it online. Okay, so what other things do I use to decide whether to take a trade or not? Remember, I'm always looking for a minimum of 3 reasons to enter a trade. Well, we have obviously the Bollinger Bands, and these are set at 20 and 2. Price often likes reversing in and or around a Bollinger Band. So you can see here how it is right now at this upper Bollinger Band, which has also got a resistance level, in other words, a previous high. So the chances are it may come back off that and the upper Bollinger Band here and come down. Now, the only thing that makes me think it may not is we've got a slight curve upwards now, starting on the Holy Channel. And sometimes price likes to continue on up past there. Now, if you're trading on your own, let me see if I can find one. Price likes reversing when it sees I can't see any just there, but when you see a candle fully outside, either on the upper or the lower, the Bollinger Band, more often than not, it's going to reverse very soon after. These aren't quite outside it, but very close to it, to being fully outside the lower Bollinger. And as you can see, the price is actually reversing as we speak now. Now, will it continue that way? I don't know. But it's just something to look out for. When the full body of the candle is outside the Bollinger Band, more than likely it will reverse on the subsequent candle. All right, so we also use the holy channels. This holy channel here is what we call a non-linear channel. In other words, it bends according to the direction of the candles, and sometimes it gives you a good idea of what direction potentially price is going to continue going in. Now, when it's in the red zone, that's what I like to see, because then it's indicating again it's overbought or oversold. Ideally, even outside the red zone is what I look for as a good indicator of whether it's overbought or oversold. Alongside that, we use a linear channel, and that's this one here, the SHI. And that's basically drawn between 2 high points and 2 low points. And that then gives us a good idea, because price loves to channel. In other words, it goes boing, 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 you know, up and down between these two points. So potentially price may go up to as far as here for reversing again. So when you see it coming close to or at the SHI line, and ideally if it's within the holy channel as well, then there's a good chance that it's going to reverse in and around that area. I would imagine originally it was drawn between this point and this point, and you can see how it, you know, when it got to there, it reversed and went back up. Good. Now, let's talk about the support and resistance. We have the blue dots represent a support area, And this is where price came down to and then subsequently bounced up off. And you can see there's two support areas here. If we zoom in a little bit, there were two areas of support, one slightly above the other one, but very close to each other. So all along here, this acted as a general support line until it was finally breached here. But only for literally 2 minutes before it started to reverse back up again. But when you see a support being touched, again, as long as you have other indicators confirming it, for example, here it was the Bollinger Band, the Holy Channel, that is also a good sign. There's also a good chance that it may reverse off those. Again, here is another strong resistance line. So price will try and break up through that, but if it fails, it goes right back down. Why does it do that? Well, it goes down to gather more energy to have another attempt at breaking up. Now, this time it only got halfway before it started to approach, didn't get there, but approached the overbought area in the value charts. So it's now going back down, looking to gain more energy to have another go. One rule of thumb is previous support, when broken, now becomes future resistance and vice versa. So, for example, this area here was a support. When it was broken, it now became the future resistance level. So when price comes back up to this level, it'll probably bounce off it a few times before it finally breaks through it. You can see here, for example, this red candle here, see how it hit that resistance, previous resistance level, and bounced off it. But it wasn't strong enough, so it blew back up through it, and then found a new resistance level. Sorry, pardon me, not resistance level, support level. So it hit that support level, came down only for a minute, and then had enough strength still, because you see where the MBFX was, had enough strength to break up through it and carry on to the new resistance level. Okay, let's talk about the indicator arrows I use. So the first one is the yellow one. No, let's talk about the aqua blue ones. To be honest, I don't pay any attention to them. They're just showing me when price is close to the Bollinger Band. That's all. The yellow, as I mentioned already, is when the value chart is getting into the overbought or oversold area. So I just pay attention. I do not trade it. I pay attention to it. Then we have the blue one. Now, the blue, magenta, and orange arrows are a mixture of MBFX, value charts, RSI, moving average, and yeah, I think that it's those ones, and at various percentages. When you see, and it goes navy blue, magenta, and then orange. When you see the orange arrow, and we've seen it many times. I mean, yesterday we saw it many times as well. I'm just seeing if I can see any today. We had quite a few yesterday. No, I'm not seeing any. But when we see an orange, that is when all of those indicators are in the, let's say, the 95 percentile region. In other words, they're screaming out, we are so overbought, it's ridiculous, or oversold, it's ridiculous. More often than not, price is going to reverse in the next minute or two after that, okay? It's a really good indicator to take a trade on. It's not obviously infallible, but it works 9 times out of 10. So if you're needing a fifth entry, that's a great one to go for. Okay, and then finally we have the well, let's talk about my favorite is the Fibonacci's. Now, Fibonacci was a mathematician from I think he was the 1500s, Italian, and he noticed that in nature, there was a sequence to which nature followed. For example, when you cut a seashell in half, the size of each section within that shell follows a sequence. A flower's petals follow a mathematical sequence, and many other things in nature follow Fibonacci sequence. And some bright spark back in the 80s wondered, would Fibonacci's sequence work with trading? So he got somebody to program a Fibonacci sequence, and using the lower and upper resistance. In this case, see this red dotted line here. So the Fibonacci sequence was drawn from here to here. And you notice that quite often, for example, here, price was bouncing off the 50, okay, and came back down to the 23.6 several times, failed, and then went back up again. And I think it's just redrawn. It has just redrawn again, this sequence. But you notice how this line is still there. Well, of course it would be, it's the 100. The most important ones are the 00, 38.2, 100, and any of the above. Those are the ones I work with when trading. And you will notice quite often, as you can see here, the 100 at the moment is acting as a resistance level, and price is going to reverse back off that. Now, it's now low enough, though, on the NBFX to potentially have strength to carry on up, and that's what it's trying to do. It's gaining strength in order to try and break up through that 100 Fibonacci barrier. But if you have time, just take a look at Fibonacci sequence in Wikipedia or something like that, and it's quite interesting. Then we have the clock, obviously, and this basically counts down the number of seconds left in this candle. And then finally, I have what's it called? Let me just, I've forgotten. It is called the GG trend bar. Yeah, the GG trend bar. And this basically gives you at a glance an idea of what basically on the different time frames, what direction price has been going. So on Euro CHF, generally, we can say it's been more or less in a sideways movement, throughout the day. And if we look at some of the others, we can see, for example, that in the last 4 hours, GBP CAD has been generally in a downward direction, but over the day, week, and month, it's been in an upward direction. You can use that, again, to give you an idea of, well, what way is price trying to go, today? So we can see GBP CAD, for example, has been generally in a downward direction. So, you'd be better off taking a put than a call in this instance, because the general trend is downwards. Good. Those are basically the main indicators. Are you guys happy with those? Are there any questions?
No, we're good.
Good. Okay. Thank you, Camille. Well, I'm going to stop recording now because that's a good length. So thank you for those who have come in to watch this session.